Most business owners think they're keeping clean books, but here's the brutal truth. Your bookkeeping could be costing you thousands of dollars in taxes. And the worst part, you won't even realize it until it's way too late. Because what if I told you this? You're not just overpaying the IRS, you're doing it willingly. Every time you log into your books and think, that's good enough. This is one of the biggest myths in bookkeeping industry. We're told that bookkeeping is just data entry, just categorizing transactions. But that belief and that mindset is exactly what's draining your bank account. Here's the reality. I've seen behind the books of hundreds of businesses, and the ones that save big on taxes don't just have a good CPA. They have bulletproof books. So in this video, I'm going to break down exactly why bookkeeping is draining your business dry quietly, and how fixing it could save you more money than any write-off can individually. So let's get into it. The IRS doesn't care what you remember. They care what you can prove. And if your records are incomplete, the IRS assumes that it doesn't exist. Did you grab office supplies or a desk at Target but forgot to upload the receipt? That $120 could have been deducted, but now it can't. Now multiply that by 20 slip-ups. That's a couple grand gone. Bookkeeping is not about perfection. It's about not leaving money on the table. Bad books equals no proof, which equals no deductions. That's just the start. Because even if your expenses are all completely legit, if your books look sketchy, you've got a whole different problem on your hands. Inconsistent books, huge miscellaneous expenses, uncategorized transactions, they all make you look shady. A business that reports meals every month but doesn't show any travel or lodging, that looks odd to the IRS. A contractor with high income but no contractor expenses, that's flagged. Good bookkeeping isn't just about tax saving, it's about protecting yourself. Think of it as audit insurance. Okay, so maybe you're saying, I do my own books and I know what I'm doing. Let's talk about that next, because that mindset, it's a pretty expensive mindset to have. Most small business owners are not trained in accounting. You're great at what you do, but that doesn't mean you should also be your own bookkeeper. You're spending 5 to 10 to maybe 20 hours a month figuring it out, categorizing manually, and guessing at what's deductible. Meanwhile, a professional bookkeeper could have handled that and probably found 10 more deductions that you probably missed. Think about your hourly rate. If you're worth $100 per hour and you're spending 10 hours messing with your books, that's $1,000 in opportunity costs, and you're still overpaying in taxes. Bookkeeping done right doesn't cost you. It actually pays for itself. But here's where it all comes together. Even if you are organized and know how to do bookkeeping, you might still be losing money if your books aren't timely. Tax planning is not just what you do in April. It's about what decisions you make in Q3. Not just what you do in Q1. Let's say you're crushing it mid-year. If you don't know your real-time profits, you won't prepay for equipment, make retirement contributions, or restructure compensation in time. All of those missed opportunities, tax strategy is proactive. It's what am I going to be putting money in now so that the future, whenever I get to tax time, it's easier to see where my deductions are. And you can't be proactive if your books are 2 months behind. So to recap, bad books means lost deductions, they raise flags with the IRS, they waste your time, and worst of all, they kill your tax strategy before it even starts. But here's the twist. Even if your books are clean, you still need to know how to categorize things properly, like meals. Because meals, they're one of the most misunderstood deductions out there. So if you want to make sure you're not leaving money behind the next time you grab lunch with a client, go watch my last video about how meals are deducted and when you can and can't deduct them. Trust me, it's one of the most powerful tweaks that you can make to your bookkeeping strategy.